Let's bring in a tech panel. Brent Thill, Jefferies tech analyst, and Harsh Kumar, Piper Sandler analyst. Brent, I'll give you first take here. You know, what do we make of this pullback? Is it the pause that refreshes?
Morning, David. Yeah, I think ultimately tech overextended. We had all the AI hype and then followed by buy-side expectations that things were accelerating in terms of demand. Demand is stabilizing, and AI won't have a material revenue impact, at least for software and some of the internet names, until 2024. So I think it's a simple timeout. You overextended. The software index, the IGV, was up 43% year to date. It's pulled back into the low 30s. We've had just a simple timeout, which is we just got overheated. And right. We believe in the AI momentum, but it's really going to take time for this to show up in terms of monetization.
Yeah. So to the extent that multiples got a bit ahead of themselves in terms of the enthusiasm around the prospects for the cash flows that would come from AI, when do we actually get back to the actual fundamentals being altered as a result of what we're seeing from AI?
It's really going to be 2024. Most of these products will be rolling out in the fall and through the winter. And we think that ultimately enterprises still have to test and train the data. And so they're not going to necessarily jump in and do a cannonball into the AI pool. They're going to tiptoe in. And so we think that this will have a bigger impact on the revenue. Next year, it'll effectively, the interest level is high, but conversion rates right now are low. Many of these products, from Salesforce to Microsoft across the board, are still not fully generally available. They're in test modes. And so we're doing these test flights, if you will, with these co-pilots. You're not going to get a lot of passengers on these AI planes until you get into 24.
Harsh, I see that you also believe that a little pullback is fair game at this point. Do you see additional pullbacks from here, or do you think at this point we could see at least a near-term bottom at these levels?
Thank you for having me on your show. So we have a slightly different tweak. We are incredibly bullish on tech at this point in time and continue to be so. I think you have to keep the perspective in mind. We started the beginning of the year, most of these stocks were incredibly low, coming off of cyclical lows of last year problems. But we are going to see a pretty tremendous acceleration, particularly in my space in semis. So I'll cite some numbers for you. The one that comes up as a problem child as far as valuation is NVIDIA. It trades at about 50 times this year's numbers and 34 times next year's number. But if I was to throw some growth numbers at you, the EPS is going to more than double. It's almost going to triple this year, ending January 2024, and it'll be up another 50% from here. And stocks like NVIDIA, companies like NVIDIA, companies like AMD are seeing the benefit of AI today because semiconductor stocks come in a little bit ahead, 6 months to a year ahead of technology deployments at larger cloud players. So I believe NVIDIA, AMD remain two of our top picks in terms of favorites for AI play. And I do agree with the rest with Brent.
Where do you see the marginal dollar, just to kind of follow up on that, Harsh, coming in for tech at this point in time? Do we have to see some sort of rotation out of treasuries into tech? Or, where is that additional cash on the sidelines that could help propel these things higher?
Yeah, so another thing to keep in mind that's very interesting, June is typically the seasonally low point for most of the tech companies. It's the lull for handsets, and hence you've got problems at Apple. It's also the lull for most semiconductor companies. And so I think we're just at a point in time where earnings sort of, tick down a little bit, maybe possibly stabilize, flattish. But then, as I mentioned, we start to see an acceleration. And I think the tech dollar, the next incremental dollar, will probably come from either treasuries or might also come from other sectors as people realize or investors realize that growth is coming back to tech.